that S&P has also flagged is that perhaps focusing more on reforms will be more effective than focusing on stimulus, which it anyway says has been conservative by the Indian government. So in the reform agenda, let me ask you about this business of strategic and non-strategic sectors being identified for disinvestment. Now, what about the banking sector? We've seen consolidation as far as banking is concerned, but could we expect privatization? One experiment was done with IDBI, but that was also moved towards LIC. Can we expect, should we expect anything specific when it comes to privatization within the banking sector, disinvestment for the banking sector?
So, Shireen, this is a very important point that you've raised, which is, before I get to answering the specific question on the banking sector, I must highlight that the change in the policy stance here is very, very important for investors to take note of, because there is a history to this. In 1955, the industrial policy at that time had actually given the commanding heights of the economy to the public sector. And despite almost 3 decades of liberalization, we've not used the word privatization, and we've not articulated very clearly, what is the role of the private sector in the Indian economy. Now, by segregating into strategic sectors and non-strategic sectors, saying that on all the non-strategic sectors, the state-owned enterprises will not basically have, their presence. And even in strategic sectors, limiting it to 1 to 4 firms, the idea has been clearly articulated that efficiency remains in the private sector. So along those lines, even in the banking sector, this is an aspect we can expect implemented going forward.
Okay, so that's important. You're saying even for the banking sector, privatization is on the cards. It is an idea that is being considered. Has there been any forward movement? Has there been an identification of which banks, for instance, the government would consider privatizing?
Shireen, let me clarify that. I'm saying this is actually an important change in policy stance. And so, banking sector in every country is a strategic sector. So this is something which, it's the articulation is of what we intend to do. But, steps along the way will be taken as we move forward.
Okay, a link to banking. I want to get 2 inputs from you. What is the expectation now as far as the rise in NPAs are concerned? Most banks that we've spoken to, whether it's State Bank of India, Bank of Baroda, do expect that post-August there will be more clarity, but they are expecting an uptick as far as NPAs are concerned. What's the government's own estimate? And also in terms of recapitalization, what should we realistically expect as part of the government's plans, because it will be required?
2 points here, Shireen. First, the ways many of these measures have been structured, they've been designed in a way that this year, which is the year when a lot of calculations basically go awry, many of these costs will not manifest this year. If you take, for instance, the 3 lakh crore package for MSMEs itself, that's for a maturity of 4 years. And by that time, because of many of the reform measures that have been taken, the supply side reform measures, one can expect growth to pick up. And as we all know very well, that a rising tide actually lifts all boats. So what is underlying here is the thought that because of some of the productivity improvements, growth would improve. And so some of the fears of non-performing assets that we are actually thinking about, once growth picks up, that may not be as much of a problem. That said, the government remains committed to supporting as and when required. But at this point in time, actually, I don't necessarily foresee significant infusions, at least for this year, because of the way that this has been structured. Secondly, it's also important to keep in mind that, compared to the Basel norm of 8% of capital adequacy, our banks, on average, the CRAR is in excess of 13%. So that's a cushion of almost in excess of 5%. So there's something to keep in mind too.
Oh, that 13 is more when you count even the private sector. But anyway, I wanted to I wanted to take on the other point. If I take only Shireen's point that she makes about divestment, and you said there are only 1 to 4 companies in every sector. I mean, there aren't more than 4 companies in any sector. Are there 4 PSU steel companies? Are there 4 PSU coal companies? Are there more than 4 PSU metal companies? I mean, there are more than 4 only in banking, sir. And you in the PJ Nayak committee recommended that for their own efficiency, even if not thorough divestment, bringing it below 50% would ensure that at least the 4 C's are kept out, or 3 of the 4 C's are kept out. You don't think that push will be part of the reform agenda of the government?
Firstly, to your observation, Lata, what I was saying, that even if you actually take into account the differences between public sector versus private sector banks on the capitalization, even public sector banks, are substantially above the norm of Basel's norm of 8%. Yes. And we know very well banks are highly leveraged entities, and therefore even a 1% increase in equity capital translates into sufficient cushion. That's the point I was making. Sure. That even taking into account that overall capital maybe CRAR may be lower for the private sector, for the public sector compared to the private sector, there's still sufficient cushion. Sure. Your point about the banking sector, I think that's absolutely well taken. There are constraints that are coming in, especially on some of the decision making, and these are aspects that the government is actually thinking about. You have to keep in mind that the solution that was recommended in the Nayak committee was one of a bank holding company, not necessarily of privatization. But this may actually be, given the stance that has been articulated, it may provide us the opportunity to possibly go further.
Oh, really? So we should expect more on the holding company angle? Is something?
No, I'm saying that I'm just contrasting between the holding company structure versus ensuring that there are basically, in strategic sectors, 1 to 4 companies. So they are 2 different solutions. And if we indeed, go ahead and implement the fact that only 1 to 4 in the strategic sectors, that will be actually a further, change compared to even the structures recommended in the Nayak committee. Yes,
that it would be. And I'm glad if you're including banking also in that 1 to 4 theme.
Oh, yes. Yes, because it is a strategic sector. I think the articulation has been very clear that, there was no exception that has been mentioned.
Look forward. Time permitting, I'll come back to that theme. And the other point that rating agencies and just about everyone is pointing out is that we've had negative capex for 3 quarters in a row. For the first time in many years, we have a negative GCFC, gross fixed capital formation for FY20. And this year, even state and central governments will not be able to attempt the capex because of the obvious fall in tax revenues. Right. Would you worry, therefore, that the medium-term trend of growth could be affected, potential growth?
So, Lata, this is something that we had, covered in detail, if you recall, in the economic survey in the, volume 2, the first chapter, looking at the reason for the fall in the investment and therefore the fall in the growth rate. What is quite interesting is that this request that came from some of corporate India to extend the 15% tax rate, which has been given for new investments for 1 more year, because this year may actually be a washout. What is underlying that thought is that companies are indeed looking at the incentive that's been provided through the tax rate for investment, and that's why the request for an extension of 1 year is coming in. So, given the incentives that are being provided for new investments, I do anticipate greater investments coming in. The slowdown in the capital formation has been, because the banking sector, some supply side aspects have really been a problem. Risk aversion in the banking sector, and that has affected actually the ability to finance projects and thereby investment. And here's again, one area where some of the aspects that you've talked about in the banking sector become crucial.
Let me ask you on that point that you made as far as private investment is concerned, and it has gone nowhere over the last several years. So do you believe that, you said that you expect this year to be a washout year, but do you expect private investment to start to pick up, given where things currently are, at least at some point next year?
Yes, I certainly do. I would want to point out many of the reforms that are being, launched. For instance, take agriculture, for instance. The APMC reforms together with the Essential Commodities Act, those provide incentives for investments to come up in food processing, in storage infrastructure, in warehouse infrastructure. So that's one area that I would expect investments to happen. In the manufacturing sector, one of the key aspects that has been highlighted to us has been some of the inflexibility on the labor side, and the reforms that are actually being undertaken on both by states and also by the center will thereby also unleash some of the incentives for investments to happen in the manufacturing sector, together with the incentive to try and actually attract some of the companies that are leaving China. So I do expect from next year investments to actually pick up.